Making money investing is easy. Before completing my degree in finance, I thought investing was educated gambling that only experts could make money doing. But in reality, if you can order a pizza on your phone, you can make money investing. So today, I'm going to teach you why investing is easier than you think, how you can start investing your money today, and how to make real money investing with very little risk. But before I get into it, I need to address a question that kept me from starting investing for years. Is it worth my time? The answer is a resounding yes. Imagine you had an ice cream truck that drives itself around all day automatically selling ice cream to people. All you had to do was get up and turn it on and sit back while it passively made you money. That's what investing is like, setting up your money in a way that it works for you. When done correctly, investing, no matter how small the amount, will make you money every single day. By not investing, it's like leaving your ice cream truck in the driveway. So while investing will not make you a billionaire, it's going to earn you enough money to make it well worth your time. Now, you might be thinking, okay, this sounds worth it, but isn't investing complicated? And I totally get it. The finance industry loves making things way more confusing than they need to be, using fancy jargon, expensive suits, and charts that look like they belong in a NASA control room. But in all honesty, investing is way easier than you think. First off, you don't need a finance degree. I spent 4 painful years of my life getting one, and as much as I would like to deny it, 90% of what I know about investing came from internships and reading, not my classes. Quite honestly, you could learn everything I know about investing by reading a couple books, watching the right YouTube videos, and scrolling Wall Street Bets at 2 a.m. Okay, maybe not that part, but the basics are shockingly simple. Spend less than you make, invest the difference in good companies, and don't panic when things get ugly. Obviously, there's way more to it and we'll get into that, but if you just do this, you're already ahead of the average person. Here's another myth. You need to be rich to start investing. Luckily, this couldn't be farther from the truth. Thanks to fractional shares and commission-free trading, you can start investing today with as little as $5. Even better, investing small amounts consistently over time is how a lot of people build wealth. But before I tell you what to invest in, I need to show you how to invest. If you're already comfortable with investing, fast forward to part 3. First, you'll need a brokerage account. This is where you'll go to buy and sell investments. There are a ton of different platforms out there, but most of them are shockingly easy to use and you can download them as an app on your phone. Here are some top options for the countries I saw most commonly in my analytics. Once your account is set up and linked to your bank, it's time to start depositing money. Start small. Even if it's just $5 or $10, the key here is consistency. Aim to add a small percentage of everything you earn to your account. Personally, I try for 20%, but honestly, anything is better than nothing. Now, when you open the app, you're probably going to be hit with a million buttons and options, and it might seem overwhelming at first. But don't worry, it's actually super simple. Think of it like ordering a pizza. First, you pick your type. This is where you'll search for the stock you want, say Apple, AAPL. Just like pizza prices can go up and down, stock prices do the same. So you'll need to choose a price you're comfortable buying at. I'd suggest setting a limit price slightly below the current price. For example, if Apple is going for $150, maybe set your price at $148. Then, just enter the number of shares you want to buy and select a duration, so the order expires if the price doesn't hit your limit. Once you've done that, you'll hit checkout and boom. As soon as the order goes through, you'll own that investment. From here, the most important thing to do is not obsess over the price every day. Just check your positions occasionally and it'll show you how much you've made or lost. But hold on, because what I just showed you is actually the exact opposite of how you should approach investing if you want to make solid, low-risk returns. So let's get into actually making money. Whatever you've heard about Nvidia, Bitcoin, options, or Amazon, forget about it. The only word I want in your head is diversification. Diversification is a golden ticket to a casino where the odds are in your favor. Think of it like this. If you put all your money into one stock, you're essentially betting everything on one single roll of the dice. But with diversification, you're playing multiple games at once. Some might lose, others might win, and over time, the wins will outweigh the losses. So imagine this. What if you had enough money to buy all of the top stocks on the market and make the ultimate diversified portfolio? That would need billions of dollars, right? No. Let me introduce you to index funds. Index funds, or ETFs, essentially give you a small slice of a massive, heavily diversified pie. So you could spend years trying to master stock picking, or you could just buy index funds and have your money grow behind the scenes. Now I know what you're thinking. This sounds way too good to be true. Unfortunately for thousands of professional investors, it isn't, because over a 15-year period, nearly 90% of actively managed funds failed to beat the S&P 500 index. Honestly, these statistics are pretty depressing for finance students like me, but for the everyday investor, they offer a great way to make high risk-adjusted returns. So if you want to take this route, simply invest in an S&P ETF listed here and avoid selling even if the price goes down. I want to make it clear that this strategy still does come with risks. So if you're looking for something more secure, you can also purchase mixed ETFs that incorporate an allocation of bonds to decrease the risk. Further down this line, you could also purchase guaranteed investments like GICs or government bonds, but the less risk you take on, the less you will make. With all that said, I'm guessing there's still a few of you who wanted more advanced technical advice, so I got you. I can't explain all these topics without making this video hours long, so a quick YouTube search of any of them will give you a starting point. With that, here's what you should do moving forward. Start today. Even if it's just $5, the hardest part of investing isn't picking stocks, it's actually getting started. As for your investment, if you want to make good returns with relatively low risk, invest in ETFs. If you want to make slightly lower but less risky returns, invest in blended ETFs. If you don't want to assume any risk but still want to make some money, invest in bonds. And if you want more advice, subscribe.